And we just moved to Dave. Dave is the CEO of EMX Royalty. Welcome on our stage, Dave.
Tarek, thank you.
Yeah.
Thank you very much.
Please, you see the time, 15 minutes.
Oh, perfect. Yeah.
Can we get the slides? Oh, we already have them. So it's your stage, please.
Oh, well, thanks again. And always great to hear Alex's update. Love Royalties, love Royalty Company. She's done a good job at building a portfolio very quickly. How many shareholders do we have in the room? Got a couple? Okay. I always like to judge exactly where to pitch at. Do I start with the beginning of the business model or do we go into an update? Isabel has a card for anyone in the audience who would like to have a whole bunch of information about us. There's a plethora of information on here, including the asset handbook, which details the 160 some royalties that we own around the world, 260 mineral property positions, et cetera, et cetera. So there's also the H.C. Wainwright report as well. So given that there's only a couple of existing shareholders in the room, I'll go into some explanation as to our business model. Using Empress as an example, a company which I have great respect for, Empress, like most of my competitors, solely buy royalties or do royalty financings to grow their portfolio. That's a great business. It's been proven to be a great business for a long time because you want to be exposed to royalties. We do that, but we also do something different, and this is our distinguishing feature. We do royalty generation work, and this is our hedgehog. We actually employ geologists around the world. We have deep experience in different mineral belts and mineral-endowed regions around the world, which we employ to actually acquire the mineral rights. For example, we're the largest mineral rights holder in all of Fennoscandia of any company. We even own more mineral rights than Boliden does in that part of the world. We touch 12,000 mining claims in the western United States. We coalesce the existing geological data. We then collect additional data in many cases. We illustrate the prospectiveness of these assets and sell them to an industry that are hungry for discovery opportunity in exchange for cash, shares, and royalties, as well as work commitments in ground. And so we've organically grown a portfolio of royalties through executing this model, which substantially builds the base of pyramid and creates what you really want out of a royalty, which is discovery optionality. That ability to be exposed to new discoveries within the portfolio at no cost to the royalty holder. And it's this concept of optionality is why you want to be exposed to royalties long term. So we do the royalty generation work, but to augment the portfolio, and particularly to help populate the top of the pyramid, we also buy royalties. We can be more patient than most. Because we're dominantly growing our portfolio through royalty generation, we can take our time and only buy royalties when we feel it's particularly astute and accretive. The third thing we do, which also contributes to us being somewhat unique, is we make strategic investments. That same economic geology team that's out doing the royalty generation work occasionally finds a royalty to purchase. Also occasionally sees an opportunity where we cannot not own the stock. The one we have on the books right now is Premium Nickel Resources, a nickel asset that everybody in this room should be familiar with in Botswana. Nickel assets are hard to come by, particularly sulfide nickel. And this is one in Botswana, a past producer that has the potential to grow substantially. We own 5% of that company. Wished I owned more. But I'll point out that in our 20-year history, we've been doing this for 20 years, we've made 75 million Canadian dollars in profits from our strategic investments. And those monies have been wrapped right back into our royalty generation work and our royalty acquisition work, continuing to grow the portfolio. So if we look at how we've grown that portfolio over time, the goldenrod is the assets of which we own 100% that we're marketing to the industry, have grown substantially over time. But those are commonly being sold out to help grow the blue line, which is the number of royalties we have. And this is just year to date. In 2022, we're at 166 royalties. By the end of the year, we'll be over 170, I'm confident. And this just illustrates how we've continued to grow this portfolio. This is what it looks like on the ground. As I mentioned, we touch 12,000 mining claims in the western United States, not the least of which is a Leeville mine, operated by Nevada Gold Mines, which is a joint venture between Barrick and Newmont. That pays about $2.5 million US per annum. There are two major discoveries, coming back to this concept that why you own royalties is discovery optionality. Two major discoveries ongoing on our properties in Arizona. One is the Park Salyer, Arizona, Sonora copper discovery. That triggered a $3 million payment to us. We oftentimes build in stage gate payments in addition to royalty payments in our deals. This is a good example. So we have a royalty when it goes into production. In the meantime, we've made some nice cash. Another example is the Peak project being advanced by South 32 in southern Arizona, which is a copper, zinc, silver deposit. These deposits are being found at no cost to us, but they're creating value for us. There's $30 to $40 million of drill money going into this portfolio globally on an annual basis. Moving to South America, Caserones is paying pre-tax $10 million US per year, copper and molybdenum asset, multi-decade mine life. We love to be exposed to long-term copper production. We think that's very smart. And the discovery optionality that we're seeing in the portfolio right now would include Diablios in Argentina being advanced by Abra Silver. They're announcing just some fantastic drill intercepts. Is that the amount of time I have left or the amount of time that I've been speaking? It doesn't matter. Yeah. You'll tell me when I'm done. Just use a hook. Pull me off. So, you know, they're cracking off some fantastic drill holes at Diablios, and it's another great example of execution of the model. So let's go over to Northern Europe. The Viscaria mine's being built. We have a 1% royalty there. Happy to have 2% of the Kaukua deposit, which I think will see the light of day eventually. It's a very large platinum, palladium, gold, copper, nickel system in Finland that we picked up very inexpensively. It's a good example of us integrating royalty generation and royalty purchase. Some of the key assets, so we'll talk about Timok briefly. Largest copper gold mine ever built in the history of Europe, largest deposit found in the history of Europe. Happy to have a piece of it, happy to have been in Serbia to help open the doors for foreign investment in Serbia. We were there very early on and advised the Serbian government. That royalty did have the potential to be diluted by Freeport as Freeport earned equity in that project. Long story short, Xinjiang says it was diluted. We say it wasn't. It was going to go to binding arbitration in British Columbia, which is what the document calls for. Xinjiang said, let's settle it amicably. I said yes. So we quickly came to commercial terms with respect to that. But the papering process to get it all done properly, and I've advised my general counsel, more important to get it right than to get it done fast. And the market, of course, is impatient and hoping that we'll get this done sooner. I'm confident that we'll get it done. I'm confident the market will be pleased with the outcome at Timok, and this will become one of the most significant royalties in our portfolio. But this has created a buying opportunity in the stock, make no doubt about it. Balya, now in production. This is a royalty that we generated in Turkey. It'll become a $2+ million a year royalty within a year or two. Right now it's paying a couple $100,000 a quarter. Gediktepe is the new oxide gold silver royalty that we have in the portfolio. Also just came into production. First payment was $1.5 million. We expect this to pay close to $8 million USD per annum in production payments, and there are stage gate payments due to us as well. We'll talk about how this all accumulates up in terms of cash flow in a minute. And I already mentioned the Salibe Pikwe investment that we have in Botswana. That's a premium nickel resources. I encourage you all to look at that stock. I would love to own more of it. So in the interest of time, I've sort of discussed what's going on in Arizona. I mentioned the discoveries. We touched 12,000 mining claims there, growing portfolio in South America, and discussed Scandinavia, the Tethyan metallogenic belt. But let's look at the economics here real quick. This shows how this is above line revenues coming into EMX and how they've grown. This is just 22 year to date, so that's just the first 3 quarters. Well, in the year, well over $30 million in top line revenues. Substantial step change in revenue coming into the company as this portfolio has successfully matured, and we've started to populate the top of the pyramid with more cash flowing assets, and there's more to come. My goal here is for next year this number to be close to 50 million Canadian dollars per year in top line revenue. And it's great to see, after having carefully worked on this for 20 years, this coming to fruition with plethora of cash flow coming our direction. So how does that look relative to the stock price? Our long-term compounded annual growth rate of our stock price is 15.5% per year over 20 years since we first financed the company with outside money, which is a good number. Certainly beats the heck out of the S&P or many other major indices. Personally, I think that's underperformance. My goal is to get that long-term compounded annual growth rate around 17, 18% per annum. And I can do that by simply getting the Timok deal settled, getting a little bit of a rebound, and the stock should double to triple within the next year or two. And then we'll be back at that sort of 18% long-term compounded annual growth rate. which is the long-term compounded annual growth rate of Franco-Nevada, I'd like to point out. And it illustrates the power of royalty businesses in general because of this concept of optionality and being exposed to the work of others perpetually. So happy to answer questions. I don't know how I did time-wise. I don't understand this clock. It still says 11 minutes, but never mind.
You have 7 minutes.
I've got all kinds of time. Maybe I had more time than I thought I did. Well, I can fill that time up with some good questions that I know are coming my way.
Can we please have another look at slide number 4?
Absolutely. You'll have to tell me what. That's slide number, this one? Yes. Number of royalties.
The yellow bars.
Yes, the yellow bars.
What's the explanation for the decrease?
We sell projects. Yeah, so this is the number of projects that we own where we own 100%. We're coalescing the data, we're marketing those to an industry, we sell them. So the yellow bars get sold and they become part of the blue bar. Yeah. So the total number of projects we own in the world today is around 260 or something, right? 265 according to this graph. I think that's slightly out of date, but never mind. And so the goldenrod color, those are the assets of which we own 100%, which we're marketing to the industry. We've been selling them at a rate of 20 to 25 per year. I believe we've sold over 90 projects in the last 5 years. So this is us, this is our inventory of our product, if you will. And then the end result is the blue bar. That's the blue bar is the one we are most importantly growing, but we have to have the goldenrod bar to get there. Sorry if that's complicated. Yes, sir.
What about the Turkey royalties? Are they in Turkish lira or what are they? Turkish lira royalties?
So these royalties, generally speaking, around the world, the commodities are sold in hard dollars or hard currency, I should say, and then we're paid in hard currency. The one in Chile, they sell the copper in dollars. They convert to pesos, pay us in pesos, and the next day we convert to dollars. So we're exposed to the peso for a few days. But in other cases, it's all USD.
Turkey, it's only dollars.
Only dollars. And I'll point out that not that I wish any poor economic outcome for the people of Turkey that I know very well, but the weak Turkish lira is greatly to the benefit of the miners because their expenses are largely in lira, yet they're selling gold in dollars. So they're doing great. And some of the lowest cutoff grades in the world are in Turkey.
Yeah. And maybe I can ask, but we read a lot about that they are buying oil from Russia, which is much cheaper in the market, rail oil. So the energy costs in Turkey are not so high, maybe as compared to Germany or something, yeah, because we have to buy everywhere for high prices. Can you?
I know that's a sensitive topic. Maybe I should avoid that one.
You can speak openly, so please.
I think that's beyond my ability to opine.
Okay. But I know that many, so many Turkish mines are at ISX beyond under 1,000 or $800 per ounce. So they have really low costs and much lower than what we see in North America now, where many majors have costs between 1,000, 1,100 to 1,300. Yeah.
Yeah, costs of working in North America are certainly higher than they are in Turkey. United States slightly higher than Canada, generally speaking. There's a significant outlier with respect to this cost of production aspect, and that is in Fennoscandia, particularly in Sweden, some of the lowest copper cutoff grades in the world exist there because of cheap energy costs from hydro.
Yeah.
Yes, sir.
How do you get your royalties from junior companies when they, for example, never go into production, just get bought out? Or
great question. So we'll sell, let's say we sell a asset to a junior company, we get some shares, we get a royalty. Commonly we build in some annual payments or stage gate payments so we can collect nickels and dimes ahead of getting dollars. But of course the success ratio of these can be very low, right? Some people talk about that actual projects that go into production long term is somewhere, some mineral economists will say 1 in 1,000. Our track record is close to 1 in 100, so we're beating the odds substantially. But the way we design the business model is so that we're not exposed to that risk. So we have the shares as added optionality, we have annual payments coming in, and many times we've had projects given back to us because they don't meet the work commitment or don't make the next annual payment, and we do further interpretation of the data and sell it again. We have some of the key assets in the portfolio that have ultimately resulted in discovery that are on their 5th operator. So there's different ways for us to manage it. It's also, we have no problem at all just saying, yep, that one's been tested, it's gone. We don't expect them all to go into production. Absolutely not.
So we have time for a last question.
Sorry. Yeah. But I do want to point out that Franco-Nevada owns 6% of our stock right now. And we're very pleased to have Franco as a shareholder. That's a real feather in our cap. I've known the Franco guys for a very long time, most of my career. In fact, I remember when Pierre Lassonde was a young entrepreneur visiting Carlin Trend, where I was a young geologist, and admiring his business model and the fact that he was so happy owning royalties on those mines. Franco specifically bought our stock, and we're the only junior royalty company they've ever invested in. And they are happy to tell people, and have allowed me to tell you, that they bought that stock because they want exposure to our royalty generation business model. That's the aspect of our business that does not compete with them. So they're happy to be exposed to that, and David Harquell himself told me that we think that the integration of royalty generation and royalty purchasing is particularly powerful. They bought in at a 25% premium to market.
Okay. Thank you very much.
Yeah, Tarek,
this was very interesting.
Oh yeah, thanks for